And we're taking a look at another retailer today, Landon, and that's Five Below ahead of earnings. Welcome to the show.
Hey guys, how you doing? Yeah, Five Below is awesome. It's one of those it's those stores where you can go in and buy some really cheap stuff and discover new products. And they've got earnings coming up, and what we're going to look at is purchase intent on Five Below. So that's when people are talking about going into the store or just having bought something at the store. And what's really interesting about Five Below is when you look at that purchase intent chart on a quarterly basis, you see very strong growth. So those very large bars there that are circled at the top, that's the quarter four that's about to be reported. And it's a big quarter for them. They had a blowout one last year, and that's preceded the stock running up quite a bit. And now it's up year over year. And what's really interesting is if you look at the current quarter, the pace, so that's what the red line circled is, Q1, the quarter as it's going so far is up year over year as well. So, just a little asterisk on that. That is pace so far. So that quarter's obviously not complete, but so far it's off to a good start. The only caveat that I would have here, and this is kind of a big one, is the stock's up about 62% year over year. So it is absolutely booming. And they just reported that they had a good year over year season. So they didn't report the entire quarter, but they did report the holiday season. So some of this may be baked in and expectations may be really high. So I'm not sure if they're going to be able to live up to those expectations. Long term, the purchase intent looks strong, but I don't know how the market's going to react.
Landon, I have a lot of questions here. I mean, I got to pick the best one here. The main thing is you're talking about it appears they're going to come out with some good news, but the stock is sold off here a little bit. It's consolidated into these earnings. So if you like it, and if you think there's good news coming from Five Below, you've got the stock 12, 13 points off its highs.
Yeah, I think it's just a matter of when you're looking at it. Are you looking at the very recent highs, or are you looking at a year ago? And so, when we look at year over year change in purchase intent, we see it's doing well, it's up, but the stock has ran so much in that amount of time. Yes, it's off recently, so this could be an opportunity if you're a longer term player. But I just worry that there is so much growth priced in, it could sell off on good news. And it's, as far as playing it, I would say that if you're going long term, I might wait for these earnings to come out and see if you might get a little bit of dip on good news and then go into it. But officially, based on LikeFolio data, we think it's slightly overpriced based on that year over year move. But again, I hear what you're saying on the recent move. So it's just a matter of when your time perspective is, short term or long term. Yeah,
and I think for traders and investors out there that might be looking at this name to play it for earnings, you got to remember that the share float's only 55 million shares, so there's not a lot of stock out there to trade. There might be some short interest built up in a name like this. So if there's not a big float out there, it does have the potential to move. I think the option market's pricing in a plus or minus $10 move in this name, so about 9% at this point. So be careful if you're going to trade that. But for more on social media, let's bring in TD Ameritrade Network's own Evelyn Baker to join us. Welcome to the show, Evelyn.
Hi, thank you.
All right, so what are you seeing on Five Below? Now, this isn't a common retailer. It's in that Dollar General, Dollar Tree type of realm, discount name, but the stock's done really well. But what are you seeing on social media as far as this company goes?
Yeah, people react really positively to Five Below online. In fact, I saw a lot of tweets today while scrolling through about people talking about the different kinds of products they bought. I mean, it's a wide array that they have, anything from makeup to toys to electronics, and it seems that the quality doesn't matter all that much because it's so cheap. If it breaks in a couple of months, no one really seems to.
It's like a Happy Meal toy, right?
Yeah, exactly.
Yeah, if it breaks, no big deal.
It's like instant gratification.
Yeah.
Right. All right, you got a tweet for us.
I do, yes. Our first tweet is from David Becker. He says, saw that Sioux City added a Five Below store. Great, because it's a discount store that accepts Apple Pay. Dollar General should take notes. Hashtag Five Below, hashtag Apple Pay. I like this one because Apple just had their big event rolling out more services included with Apple Pay. And I saw online, according to the websites, Dollar Tree and Dollar General do not accept that form of payment.
Yeah.
Now here's my question for anyone who can answer this, because is Dollar Tree and Dollar General, is that the contemporary of this store of Five Below?
Well, they're the cheaper based products like $1 or most items are $1 or below or around $1. Five Below is around $5. I'm not sure. Landon, does your data show that everything's $5 or below, or does it kind of mesh with Dollar Tree where it can be over $1?
Yeah, I think that everything is 5 and below. I'm not positive about that, but I will say that Evelyn brings up a great point in that people like to go in there maybe not even knowing what they're going to buy, and they just kind of like to look around. The stores are crowded with a lot of fun products, and there's a lot of diversity in what to choose from. And so people go in there with some money to spend, and they don't even know what they're going to walk out with, oftentimes walking out spending more than they expected. And what's great about this company is it's hard to disrupt. So if you think about, the scare of Amazon coming into your space, no one's going on Amazon shopping for comparison shopping on prices and for products that they find at Five Below. They're walking into these stores, not sure what to buy. They see some cool stuff. They walk out with it. They're happy. If it breaks in a couple months, like you said, no big deal. Happiness for Five Below is very high, and so it's here to stay, I think, and it's not going to be disrupted by shipping concerns or things, price comparisons online. So it's a very strong company.
Yeah, they don't have to compete with that big behemoth Amazon. That probably helps them. But Evelyn, you got another tweet for us.
I do, yes. Our next tweet is from Darnell McNeil. He says, "Sorry, Dollar General, we've been through so much these last few years, but I must say goodbye for now. There's a new business that makes me feel like the Jeffersons felt. # moving on up." This one's fun, right?
That's awesome. Did you even know what that meant, Evelyn?
I knew you would ask. Yeah, I know. Yeah, I know. Let's leave
know
it there.
That. Okay, the Jeffersons. That was a classic TV show when I was young. But I think that the consumer, the data that we've seen in Redbook sales, the chain store sales on a weekly basis, consumers still supporting this economy, Landon. Is your data showing that if they're not competing against Amazon, they're in this good space where people's wages are rising. Hey, I'll spend a little bit more. Instead of going to Dollar Tree or Dollar General, I'll just move on up to Five Below.
That's great that Five Below is a step up. Yes, I will say we looked at the data. Dollar Tree, Dollar General, Five Below, they're all booming as far as purchase intent goes. So I think this is just a growing sector where they're all rising. I'm not sure about if stronger economy makes people go from the $1 items to the $5 items. I love that tweet, though, moving on up. But last thought is that you mentioned this 8 or 9% market maker move. When you look at the history of this company on earnings reports, it can move even more than that. So this is, it has potential for a very large move. So if investors are playing it, be very cautious. Our data, again, is slightly overbought, but long-term bullish, if that makes sense. So again, just be a little bit cautious with Five Below playing it on earnings. There's a small float, like you said.